Happy TGIF. Happy Friday. The weather here in North Texas is finally getting lovely. Even had a fire on outside the other night. So excited about that. But TGIF this week is back to basics. I've had a ton of questions this week about the interest rates. Where are they going? What are they doing? What's happened? Have they come down? We're going to go a little deeper on rates and home prices. And we're just going to kind of stick to the basics here. But I do think it's worth watching. So let's hit it and go from there. All right. So where are rates? Rates right now, according to mortgagenewsdaily.com, says they're back in the sevens. All right, is what it is. As we know, things have been not so great lately. So low sevens. Remember that does typically include some form of points. Here's a daily. You guys can see the daily chart of MBS, mortgage-backed securities. And again, down in this case is bad. That means higher rates. Basically, right around the end of September, early October, rates have just been taking it on the chin. And you can see that we're down here and we are holding on to this layer or level of this floor resistance or support, I should say, floor of support. And you can see how we've touched it a couple times and stay above it. I hope we stay there because if we break below that, it's another 50, 60 basis points that they could fall. So hopefully we'll stay here, but we are fighting an uphill battle at this very moment. I think that's temporary. Part of the reason for that is the CPI came out this week. The good news is everybody kind of expected it to be just what it was. I mean, it was no big surprises. Unfortunately, and I'm not going to go into everything here. As I said, we're going to keep it real high level. The reality is I don't think you're going to see much improvement in inflation until probably February's reports. So this shelter, it always lags. It can and will come down. But ultimately, it's just going to take a minute. It's going to take probably another 2 reports or so before that comes through and gets lower to help us out from an inflation standpoint. The big question this week, where are rates? What are they doing? Where are they going? What's that crystal ball say? So this chart I like because on the far right, you can see all the dotted lines, and this is Fannie Mae. It's the Mortgage Bankers Association, the National Association of Realtors, and Wells Fargo. I don't know how Wells Fargo, they probably made this chart. But you got Wells Fargo out there, and they're saying the rates are going to go down the most. I'm going to put a little more stock in probably the mortgage bankers, maybe then the Fannie. So the green and the yellow are kind of the two, and coincidentally, those two kind of converge about the same spot. So in the last month or two, we've been talking about these newer forecasts say rates next year and beyond are going to probably be around that 6% range. And that's about what those two show here. So, the light blue, the National Association of Realtors, they think rates are going to stay elevated. Looks like they're probably predicting somewhere in that low 6 range based on this chart. I agree. I think we're going to be in that low 6, mid 6. However, and I hate to tell you this, however, I could see a scenario to where when the new administration comes into office, if tax cuts happen, if all kinds of wonderful good things in the headlines happen, that may spur the economy, which could be, air quotes, a good thing. But the reality is that could bring back inflation. In fact, so much so that literally just part of the reason why this is being released today on Friday, not yesterday, is Jay Powell came out, the Fed came out and basically said, hey, literally as of Wednesday morning, there was about an 80% chance, I saw 78%, like 82 to 78% chance after those inflation numbers came out that December 18, there's going to be a quarter cut. All of a sudden now, the Fed's moonwalking a little bit and starting to use different language that says, hey, we may not cut. We may wait and see what happens. It just depends. And all of a sudden now, that's pushed mortgage rates up the last day or so. So there you go. That's my rate forecast. But here's the good news, bad news, right? The homes, you can see headlines like this one saying the number of homes for sale is on the rise. And it's true. Look at the inventory. Look what's happened here just in the last year or so. But this next chart, and you can even see it on this one, go back to 2019, which is that first third. We are still 20 something, like 19% lower than 2019. So check out this chart on the right. The middle black one happens to be the middle. It is this year, 2024 in black. You can see the number of active homes listed for sale. And this is according to realtor.com. But you can see everything pre-COVID, 2019, 18, and 17, still significantly more than where we're at today. So yes, are there more homes for sale today than there were during COVID? Yes. And that's a good thing because the hardest trouble we've been having lately is inventory for the last couple of years is finding a home because nobody wants to sell. So more homes coming online fundamentally is a good thing, believe it or not. And then lastly, here was an interesting chart that I was like, dang, this is crazy. you can see that building construction, right? This is the number of houses. Now, by the way, the chart's a little misleading because every one of the chart bars is nine, or a decade, 10 years, give or take, except for the very last one where it's only 4, right? So to understand, you got to double that one to make it look, but you can still see how many homes have been built in the past, and yet how few have been built just since COVID. And that's contributing to the housing shortage because population and immigration has just increased every one of these years. So we are getting more and more homeowners or potential homeowners with less and less inventory. So prices are still going to probably go up. So there's this and the next one looks similar, but this is Case-Shiller's price index. You guys can see the appreciation. Yeah, during the latter part of 2022, houses depreciated a whopping 1%, maybe, right? That next line is 1%. These look like big numbers, but the reality is that's 1%. And only twice was it less than 1%. The rest of this time it's been 1%, 2% in the beginning. So the point is, house prices aren't going to come crashing down because people are like, oh, I'm going to wait. Look, you can wait, but we're in a healthy housing market in the sense that appreciation from 1 to 2%, kind of normal and healthy. It's not the 40% that you've seen. Here's Core Logic, similar graph, similar message. So there you go. There you have it for the fun stuff along those lines about how housing prices have gotten expensive. This shocked me. Apparently, in Texas, or in North Texas at least, the number one uh, expensive or housing market, I guess how they define this, was Irving, Texas. That's the answer. I would not have guessed that. If you give me 20 guesses, I wouldn't have gotten Irving. Then you guys can see the right how the average sales price in Irving's apparently 720 grand. I'm shocked by that. The average sales price in Frisco also higher than I anticipated, 900. That's the average. That is crazy to me. Lake Highlands 720. I get that. I'm on board with that. And then on the third bullet point, Whitewright. I think I know that because I've done a loan up there for somebody, a friend of a friend. So I know where it is. It's up there. But apparently it's outpaced the entire state with a 58% price jump in 1 year. 1 year. And it's gone up almost 200% since COVID happened, which is crazy. So the Metroplex keeps going north. Renters, this was interesting. Gen Z versus millennials. 62% of millennials are spending over 30% of their income on rent. So that to me seems relatively normal. What was surprising, the poor Gen Zers, the Gen Zers are spending about 40% of their income on rent. And that's about the high side of what, normal mortgages say, like you should spend about 40% of your income on rent or on a mortgage. So that's a lot. I just thought I'd share that. And that's my, kind of update for the week as far as more, it's obviously just more interest rates and more housing, but I did like this one for the new disclosure for my clients to sign before I quote a rate. Please do not say, damn, when you hear the price. And there you have it, folks. Have a great weekend. Forward, share, subscribe, all that fun stuff. Check us out. Don't be a stranger. Let us know what you think. Have a great day, great weekend. Happy Friday. Enjoy the weather. Bye, everybody.